Hi everyone, I'm Kieran Taylor.
I'm Martin Welsh.
I'm Emma Murison.
And welcome to another episode of Those Pension Guys. So I think we're going a bit left field with this one actually. It's something a little bit different today. But being the master of ceremonies as you are, keep us right. What we're talking about today.
So today we're going to talk a bit about money and identity. So lots of different factors that come into that. Childhood, family, life experiences, culture, all these things. So Kieran, take us a bit deeper into that and what sort of things can shape your financial decisions as an adult.
Yeah, I think it starts with youth, doesn't it? It kind of starts with you as a child. And I think in the society that we live in just now, it is a little bit fragmented, I think that's fair to say. You have those that maybe grow up really in scarcity. Now, there's obviously the very obvious part of that, of growing up with that can be really difficult. You know, you have to go without things, and that's not a joyous decision or a joyous thing for anyone to have, particularly being the parent of a child. It's not the environment you'd like to bring people up in. Weirdly, though, I've noticed that there can be some good parts of that. I mean, I must admit, a lot of our wealthiest clients and people that I think have been really successful, many of them grew up with scarcity, and I think in many ways it shaped their financial future. There can be some benefit for them to realise, actually, I had that beginning in life, and I don't want that for my kids, and I don't want that for my grandkids. Equally, you have people that grow up in abundance. Now, it would seem very obvious to think, well, that'd be a great scenario to live in, that, you know, you never go without anything, you would get everything that you could ever possibly want. But with the lack of, say, things like financial education, as you become older and you've lived in abundance, that could be a bad thing because you've never learnt the value of money, you've never learnt the value of work. And how long does it take until actually all that wealth could be gone in a generation? And unfortunately, we've seen a lot of cases like that.
We have, haven't we, where, there's a big inheritance, they aren't so educated, and they maybe could have planned better, and before you know it, what was quite a big pot has now decreased to something half the size in a few years.
Yeah. Because, again, going back to financial education for a second, because it's not really prevalent in the school system, I think it is fair to say for most of us, we probably learn our earliest financial habits from our parents. Sometimes that's a good thing, sometimes that's not a good thing. It really depends, obviously, that's how people live. We'll go from there. There's also the cultural expectations around money, and it's really interesting living in a country like Britain, the different cultures that come together and how that all works. There's a cracking guy of mine, is from Bangladesh originally, and he was talking about the cultural differences with money. And he said, it's quite different from how it works in Scotland, Kieran, that in Scotland, people are quite individualistic. You know, your money would be your money, your brother's money would be his money, your sister would be that. You know, everyone kind of does their own thing. It's not really like that in Asian culture. It's the family's money. So, for example, the family own 2 Porsches, but it's everyone's Porsche. Anyone and everyone can drive. It belongs to everyone. It's the same with the house. It's the same with the money. So depending on the kind of culture and society that you can grow up in, it can shape your outlook on money. And it's something that impacts you for your whole life, really, doesn't it?
It does. And it was actually one I was reflecting on, sort of trying to look back. Where did I get my financial habits, behaviours from? Of course, parents, grandparents, was the natural place I honed in on. And it made me look back to, my grandfather when he was here, that, he was an absolute saver. He worked really hard, he saved all he could get. And the only thing he knew was going down to his local branch of the bank, speaking to the bank manager and getting a good interest rate and a 1-year fixed bond or something like that. Yeah. And, for 10 years, as I was a wee child growing up, seeing him doing that time and time again. And he was really open. He spoke about his money and the family and knew what was going on. So he had, some savings with the bank. But never once did I hear him speaking about stock prices, stock markets, funds, nothing. And of course, now you've got the internet at your fingertips, it is easier to get, information. But I think that, yes, it's very easy that if your parents or grandparents do it one way, it's quite obvious or quite typical that you'll fall into that, which can be good and bad within that.
Totally. And I think a big part of it as well is just society, really, that we live in today, where typically it's not very natural that even your closest friends, you probably wouldn't speak to them about, the depths of your financial situation. People tend not to speak about, what their earnings are and all these things. It's just sort of our societal norm to not speak about it. Very British.
Private,
yeah.
It's the British thing, is that the stiff upper lip and keep calm and carry on. And,
it is, that's it. So it can be hard to, without no one speaking about it, it can be hard to find better behaviours or different ways to improve or shape your behaviours because you don't know what anyone else is doing. And as you say, there is the internet, obviously has an abundance of information, but how do you know that that's suitable for what you're trying to do? And I know we were speaking about some of the behavioural identities, I guess. So like the saver, the spender, the avoider. Would you mind going into a bit more detail about what those really look like?
Sure, yeah, and that's the three main categories that we always see within clients and everyone else that we speak to, of course, as well. You've got the saver, somebody that's working hard, saving as much as they possibly can. And I think that's really good. It teaches you habits early on. So, if you come from a family that constantly look at, budgeting, spending only what they need to, put money back aside most months. It might be to save for Christmas, it might be to save for a holiday, it might be to save for something bigger, or to have a nice cushion should it ever be needed. So the saver is somebody that is always thinking about their future. They're always wanting to save for tomorrow. They're always wanting to have that security safety blanket. You've got the spender, which, as you'd imagine, is the opposite. So that is typically somebody that probably is more likely to live paycheck to paycheck. They get paid at the start of the month and the end of the month, but for the rest of that four-week period or so, they almost spend everything they've got, and it just happens again. And in the more extreme examples, you see them spending most of what they got in the first 2 weeks and really struggling for the next 2 weeks, and then they get paid again, and they're on that horrible yo-yo that they just, they can't get out of. So you've got the spenders. And then you've got the avoiders, and I think that there's a lot of people guilty of that, and that is just the head in the sand. They don't know what to do, they don't want to take action, they don't want to speak about it. They're, as we just said, society, it's quite private here in the UK. So it's the avoiders that think, I know I should be doing something, but I'm not going to do anything. I don't know what to do, so I'm just going to do nothing at all. And they're just avoiding and putting off. And we see that time and time again for clients that, I know I should have came here earlier. I know I should have came to speak to you sooner, but I've been put off. Or sometimes I've been embarrassed. I haven't got a pension. I haven't got savings. I'm embarrassed. I don't want to talk to somebody about it. Whereas it's taken that step to open up and, okay, well, what's happened. Let's put a plan in place.
It's a bit like hiding under the bed covers, isn't it? And try to avoid it. If you don't see it, that it's not there. But I would argue out of everything, that's probably some of the most detrimental, isn't it?
It
just
is.
want to avoid these
yes,
things.
It is, because that's the ones where you could take action, and it might be, you're avoiding the fact that you spend all your money, or you're avoiding that you should be doing something for your future.
Yeah. Mm-hmm. And we often see a lot of crossovers, or even sort of like you can have different versions of, say, a saver, for example. So a saver who has got a goal in mind, say retirement, and they save really hard and they do a great job, but then they can't quite get out of that saving habit. Mm-hmm. And in retirement, they struggle to enjoy it because they're so used to saving every penny that they can't enjoy it the way they'd probably dreamed all these years of saving.
Totally. And we see that quite often because they've worked so hard for 20, 30, 40 years to build up to this overall portfolio they've finally reached. And the idea of now stopping working, stopping earning, stopping paying into something, and to actually start taking from it. You see a lot of clients really struggling with that, to say, I don't want to take too much, and is that okay? I'm scared it's going to go down in value, and they've worked really hard to build that. And now joking aside, we're kind of almost joking with clients to say, you need to be spending it. There's inheritance tax rules in the UK that if you leave too much behind, actually HMRC will get a big share of the estate rather than your family. So what we're trying to encourage those clients, say, look, you've been a spender all your life. We can look at the cash flows that we spoke about before, we can look at that to make sure they're going to be okay and encourage them to enjoy it. And it was clients of mine, they've got a lot of wealth and they've never flown business class. They're retired. They were going to Australia. I think it was the 19-hour flight from London, if I remember rightly. And I was saying, I guess you're going to go business class. Oh, no. We could never afford that. But the reality is they absolutely could. But then when we delved down into it, it was more a case of I wouldn't enjoy it. Knowing I had spent 3-4 times more than a standard ticket price for business, I actually wouldn't enjoy the flight. It would annoy me so much, and it would be the only thing I could think about. It would stop me enjoying myself.
I think you're right with people, it's the emotions of it. So, for example, I know you won't mind me saying, my father-in-law's a bit like that. When he travels a lot, to him, the travel bit to get from where he's left the house to the destination, you would think the easiest, the most convenient, the most time, all that sort of stuff. To him, it's a game. How little can you spend to get there?
That's why him and my dad are friends.
Oh, yeah. And it can be planes, trains and automobiles. And I think, you're going to Lanzarote and it took you X amount of time. But to him, it's a game because he can say, but I got there for X. I get my bus pass now for free, so I got the bus down to Edinburgh. What are you doing that for? And it's the same as, with, you could get a taxi that would get you there when you arrive, in the case of 10 minutes, but you get some daft bus or whatever. But that's him. It's not about the money, it's just the principle of, but I know I could get to the same destination. I'm travelling by myself, I'm not in a rush. So I think emotion plays a huge part of it. It's how you feel.
It does, and it's the principle. It's exactly what you just said there. It's the principle of, oh no, I'm doing it this way, and I'm sticking to it.
I'm sure my dad, he had to go down to England for work, and he could have got the train that took him directly there, but he decided to pick, he had to change 7 times, 7 different stations or something, just to get the cheapest ticket. And the kicker was his work were paying for it. So it didn't even affect him, it was just that satisfaction of knowing he'd got the best deal.
Old habits die hard, I suppose, don't they?
That didn't pass down to me. So I'm keen to understand a bit more about how these behaviours can shape adult decisions. What sort of things do you see from clients?
I think the common ones we see is always the first starts how people anticipate risk. I think what sometimes it can cause people to be really risk takers. The one I've heard in the past is, I'm a bit of a gambler, my dad liked a bit of a flutter on the horses and things like that, and that came down to me. But that's how they shape their investment decisions. But sometimes that's not always the right course of action to take. Equally, you have people that are real risk avoidance. So going back to your point, Martin, you have clients that were really fixed into things like cash products. And what that's ingrained in them over years is, but that's guaranteed. Even though the fixed rate I'm getting actually won't match inflation. But it says 2%, I'll get 2%, rain or shine, I will. And again, that's not always the right decision for someone to make. I think going back to one of your other points actually was probably over saving and under living. I think the trend I've seen for a few clients, particularly over the last few years, now that they're getting older, some more ailments and things like that, where travelling is becoming more difficult for them, there is that now regret to think, Kieran, I retired at 62. I'm 75 now. And actually the whole burden of travel, getting travel insurance, my hip, everything, I wish I'd travelled a little bit more. I've realised I have the money to do it. And this is it for me anyway, this is only my opinion. I think money without purpose is pointless. If it's just numbers on a screen to look at, I don't get that. It should be for a purpose to enjoy your life. I'm certainly of the opinion you're only here once anyway. But I think that's been a behaviour that's been grown into people, exactly what you've said. They've just saved and saved and saved and saved. They actually don't know how to decumulate. No. But it's the hope that hopefully advice can help people get there.
I've also seen a lot of scenarios, unfortunately, where they get ill very quickly as soon as they retire, or unfortunately a loved one gets ill or passes away, and that retirement dream that they once had is no longer going to be the thing that they can achieve, unfortunately. And some of the time they're looking at it thinking, I could have retired at 60, I had enough. Sometimes it isn't. We've got the £1 million pension episode that we've got that we released, and sometimes the £600,000 pension portfolio, retiring 5 years earlier and having a happier retirement, would have been a better result. And it is really trying to delve down into our clients to find out what is the most important to them. And it's all great, we're all wanting to build wealth portfolios, but sometimes understanding when is enough and making sure you enjoy that.
Totally. I actually want to focus on, when we talk about behavioural habits and things, I think actually for the young people, are people that I'm really concerned about at the moment, that those have maybe learnt from parents that they've got a fear of investing. Now, the reason I'm more concerned for the younger generation is because the days of the guaranteed final salary pension, gone, dead as a dodo. There are some people that lived in our society that technically did not have to save anything for retirement. They had the gold-plated pension at the end. Unless you work in the public sector now, that's nigh on impossible. If you are a younger person, you've got a fear of investing, you've got yourself in a real risk and a bind of not being able to retire when you want to or live the life you want. The bad news is you're going to have to invest for your future. The cost of living, how things have worked, you are going to have to take some action from that. So if you are an individual that maybe learned from parents that, my mum and dad never trusted the stock market, they thought investing wasn't, that's not for us, that's not for people like us. It is, and it's going to be a course of action I think people are absolutely going to have to take.
Yeah, it's getting past that scary bit. If you don't know enough about it, you're just going off other people's opinions instead of, right, I'm going to educate myself, I'm going to learn about it, I'm going to talk openly to my friends, my family, and it goes without saying, obviously, a professional advisor. That's what we're here to help with.
I think the other behaviour I've noticed from people is, and I love this phrase, the paralysis of the analysis. You get some people that love to look into the in-depth details of absolutely everything. But what happens is that they end up doing nothing. They research this, and they've got loads of information, but nothing that actually delivers them to a decision. But then lastly, the people that, and you touched on them before, Martin, the avoiders, that it's easier just not to talk about it or not to think about it. It'll go away if I don't think about it. it won't. This stuff is important. Sometimes in life you've got to make decisions, and sometimes they're really hard decisions, but everyone has to go through them. You're not alone in that. But I think, unfortunately, that can be a cultural behaviour, something that you learn from someone, and it can be a difficult cycle to get out of.
Absolutely. And a lot of these behaviours, they are quite deeply ingrained in us. But how can people kind of rewrite their story or reshape their behaviours?
Oh, that's a good question.
I think it's all about the awareness, that if in schools anyway, obviously it was a wee while since I was last in school, but still speaking to ones that are going through academy now, there's very little financial education still. And I think that's a huge problem in the UK. I look back to when I went to school and you learn all about, physics, maths, all these things that...
Pythagoras theorem.
Pythagoras, algebra, things that I genuinely have not used for many, many years. We run a business, we give financial advice, we go to work every day, and those things we haven't used. But what I have used is credit cards, I've got a mortgage, I've got a pension, I've got savings, investments, and none of that was really taught at school, so that people are coming out not probably really understanding that if you put debt into a credit card, it's quite a hard hole to get out of. Yeah. It gets worse and worse and worse. And, I've definitely seen that in some of the younger generation of, I'll just get what I want. So I got new trainers, they were a couple £100, I got this, I got that, I went on holiday, I've got £10,000 of debt on a credit card and nothing in savings. And unfortunately, there was no financial education around that to teach them that, well, if you're paying this much in APR, it's going to be very hard to get out of that. So it's building that awareness and making sure that you educate yourself and those around you. And I think as a father, definitely putting the pressure on the parents and grandparents, say, well, it is our responsibility to try and teach good behaviours, build an awareness. And it could be, don't get into debt, but equally it could be this is how our mortgage works, this is how our pension works, this is why it's important to think about your future and save for it and not miss out on the opportunity as well.
I think you're right, actually. It's something I've tried to do with my wife, or my little daughter anyway. She's got we call it her baby pension. She's not a baby anymore, she's a toddler, but she's got her junior SIP and her ISA. And one of the things I want to do is to try and get her involved in the process. She's not even 2 now, but when she's a little bit older, to explain, but that's your money. Mm-hmm. And I've heard this from a client of mine who's been a grandparent to 4, actually, and the grandkids now ask him when they go around the house, Granda, can we log in and see how our investments are doing? So every few months they want to log in and see. He wants them to try and treasure it and understand what they've got, that this is important, this is your money, but don't squander it. People have put money away, and trying to educate them, I think, as early as you can, or try and get some understanding. Hopefully that's going to reap the benefits in the future.
Yeah, it's brilliant though, and it then comes down to communication, doesn't it? Being open and honest. And we see this a lot with couples, married or not married. We see this a lot with couples when sometimes they keep their finances totally separate. So, I don't know what is in the bank with him. It's just me that looks after my money and vice versa. And you end up almost having 2 separate meetings with them. And it's not that they're keeping secrets. It's just they'd rather do their own thing. And quite often the ones that we see generating the most wealth and building the most successful portfolios are the ones that are really open and honest with each other. I've got some store credit debt over here. Well, actually, let's get rid of that and then we'll build a plan together. Or I've got unused allowances. I've actually used up my ISA allowance. Let's use some of yours, and working together and putting that in place. And I think that's a really good one, like being honest with each other, good or bad, and trying to maximise anything that you can as a couple or a family even, and just having that open communication and trying to get away from that sort of keeping everything private and actually trying to encourage those around you to be doing positive behaviours with their finances.
Definitely.
Totally. And what sort of habits can people put into place that might help them?
One thing I really liked, and again it's coming back to working with a professional advisor, but loads of people I've spoke to, when they want to get fit and healthy, they want to lose weight, they want to get in shape, usually they'll go to a gym, and quite often they'll speak to a personal trainer. But when you look at it, yes, you need to be taught what to do, you need to be shown, you need to have a workout plan, but a lot of the time it's accountability. You are accountable to somebody, so usually you'll turn up and do your workouts because your personal trainer's there, or you'll report your weigh-ins at the end of the week because your personal trainer is going to ask you for them, and you want to show improvements. That's something you're in control of. I think a lot of the time financial advisors kind of become your PT for finance. They hold you to a high accountability, and I see that in clients. Sometimes they need that. They need to be held to account.
Definitely. And you know what, that's maybe a healthy and a good place for us to close. So that's Martin. I thank you as always for being with me and for sharing your insight there. And I suppose to leave you with a note for all the listeners out there, your past doesn't equal your future. I mean, even being honest in my own situation, I've had debt on a credit card before. I've been made redundant before. I've been left with nothing after a difficult situation. I'm now in a positive position. I run a great business with great people, and I think I'm in a great financial situation considering my age. But that's come over time, that's come over education, that's making those difficult decisions. So if you feel you're maybe not where you want to be now, maybe ask yourself the question, what financial behaviour characteristics do you think you've got today, and what would you like them to be in the future? And if you're unsure, go and talk to an independent financial advisor, as I'm sure they'd be able to give you some great insight. If you have any questions, as always, you can contact us on welshandtaylorwealth.co.uk. Thank you once again for listening, and we'll see you very soon. Take care.